What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Monday. My name is Ansel Lindner, and today is Fundamental Report Day. So every Monday, I put out the Bitcoin Fundamentals Report on my website, bitcoinandmarkets.com, and then I read through it, expand, go on some tangents, open it up for questions. If you guys have any questions, make sure you put them down in the comments. I'm live streaming on Rumble and YouTube and Telegram. Telegram is my home base for connecting with the community. So check out t.me/Bitcoin and Markets. Okay, let's share the screen and jump right into it. I'm going to make sure Telegram has still got eyes. Okay, so bitcoinandmarkets.com. Monday, fundamentals report goes out, but I do a premium newsletter that goes deep into macro and Bitcoin charting, price calls, my macro thesis, all sorts of things, like including macro events like we see going on in the Red Sea, kind of detailing out maybe how Japan is going to fare over the next 10 years, or Western Europe, or getting into the macro thesis a little bit more. Those go out typically Thursday or Friday every week, and those go out to the professional tier. You can also support my content and just become a regular member here. You get access to where's the most recent one? I'll find it here real quick if the website wants to load. Okay. Price prediction or price forecast competition. So if you are a paid member, you get to put in a prediction at the beginning of the month for the end of the month, and the closest person at the end of the month wins $20 in sats. I'm still waiting to hear from one of the winners for November. So if you are an Anon that won the November contest, let me jump in here and see who it was. Alibi. I've heard from Green, but Alibi, if you are listening out there, I don't know how to contact you. I'll probably have to send you an email here in a little while. But if you're watching, contact me and I'll get you that $20 in sats over the Lightning Network. Okay. Let's go back out to the main page. Come on. What do we got here? All right. So Bitcoin Fundamentals Report, number 270. Starting off with the HODL meme. This is the 10-year anniversary of the HODL meme. There is debate in the Bitcoin space about if it's HODL or HODL. Of course, every sane person knows that it's HODL. But that started 10 years ago with a misspelling. As you can see, I am hodling. And he said he tried to type it twice and he knew it was wrong. He drank a bunch of whiskey or something because he had some bad trades in Bitcoin early on, and he was just going to stop trading and hold. That is still the best advice for 99% of people out there. Don't trade Bitcoin and never short Bitcoin for 99.9% of people out there. Okay, let's go down. Snapshot of Bitcoin. This week, we are in a consolidation. We're going to take a look at the live price chart here in a minute. Media sentiment is neutral. There's still some stuff bubbling about the Senator Warren thing. I heard that they had 20 senators out of the 100 senators in the United States Senate that are supposedly backing this bill. So we will see where it goes. But overall, remember, the Senator Warren thing, she's never got any of her own bills passed. She just wants to move the Overton window, put that dialectic out there where she throws out the antithesis, and she wants to get a synthesis somewhere, not where we're at now, a little bit further down the road. She wants to push it down the road and move the conversation. Anyway, that's still kind of bubbling out there, so I had to get the media sentiment at neutral. Network traffic is very high, even though it was down 2 megabytes in the mempool week to week, so issue to issue here. But it is still very high. Mining industry is growing rapidly. We're going to go through some headlines there. Days until halving, 121, so almost at that 4-month mark. Price section. Weekly price, we did go up almost $500 Monday to Monday. That's 1%. Market cap is 0.816 trillion. We got to get used to putting it in the trillion format because it will be going way over a trillion. Satoshis per dollar, even at 2,400 when I pulled that. One Finny, which is 1/10,000th of a Bitcoin, right in smack dab in the middle of the decimal places. So you don't have to go all the way to Satoshis. You can stop halfway at Finnies. And it's a pretty good measure right now because it's $4.17. That's much more you can do a lot more mental calculations when you're talking about $4.17 then even with you talking about a Satoshi, you still have to go 4 decimal places out when you talk about Satoshis. You have to talk about Satoshis in the thousands. This is just much more easy right now, at least to talk about Finnies. And when we go to 100,000, we'll be at $10. When we go to a million, a Finny will be $100. So that is a very nice denomination. I'm trying to sell it, shill it. Let's get that Finny as a denomination. Anyway, mining sector, difficulty adjustment. The last one was -1%. The next one estimated now at plus 4% in 4 days. That went from -0.5% last week to now plus 4%. So you can tell a lot of action has been happening on the Bitcoin mining side of the industry here. Mempool, like I said, it is down 2 megabytes from last week, at least when I pulled this information, 346 megabytes. Fees, however, so while the mempool was going higher, fees were staying low, relatively low, or even dropping slightly over the last couple of weeks. This week, at least when I pulled this data, the fee to get into the next block was over $9, 154 sats per virtual byte. That's very expensive. You're not going to see a lot of inscriptions paying that. I mean, you'd talk average inscription cost of like probably north of $2,000 just to inscribe something. So most likely you're not going to see a lot of those. Even the low priority fee was over $7 at $7.69. Lightning Network, oh boy. I mean, high fee environment is going to be bad on Lightning Network as well because you got to open the channels. You got to rebalance channels. I know new stuff is coming to help that out, but high fee environment is not good for building the Lightning Network. It's just not. If I want to make a $10 payment, am I going to open a channel for $9? Probably not. Okay, so this is what we kind of expect. Another 0.3% decline in the number, Bitcoin capacity, and channels, same thing, 0.3% down. 187 channels have closed on net over the last week, 59,533. All right, in case you missed it, did put out a member post. That's that professional tier Proton. I call them protons. And I got a couple questions on that. So I call them protons because they were called Bitcoin and Markets Pro. But then I started writing for Bitcoin Magazine Pro at bmpro.substack.com. And so I thought my pro was too close to their pro. And so I had to change it to protons. And they initially were supposed to be short and sweet. But like I've said to my followers, everything I make tends to get longer and longer as I go. Okay, community streams and podcasts. I did get one podcast released last week it was the one I think on Wednesday, maybe or no, it wasn't Wednesday. Anyway, Wall Street versus the globalists, just kind of detailing out that comments, that idea a little bit more. Live streams, of course, try to live stream Monday, Wednesday, Friday. I live streamed Monday, Tuesday, Wednesday last week. Did not live stream on Friday, but at least 3 live streams a week. Blog post, been really working on this demographic piece, and I've come across some really good arguments recently, and I'll just throw this out here because this read through of the fundamentals report is all about the tangents. But I came across something. They were talking about status, and because education used to be a status symbol for guys that women were attracted to. Now women have more college education than men have. So it's not a status symbol anymore for men. So what is the status symbol that's going to take that place? We're losing status symbols for men, and we need to replace them with something. So anyway, I want to think about that a little bit. Naturally, what will replace that? Because I don't think anybody says, "Oh, we want to get rid of education for women and stuff," but we have to replace something. We have to find some status for men, or else the birth rate's going to continue to go down. Network effects are going to run in reverse, and it's going to get very bad very quickly over the next couple decades if we don't figure something out. But okay, Bitcoin Magazine. I produce 2 dashboards for them a week, as well as my longer form blog post. You can take a look at that. Let me share the screen on that one. bmpro.substack.com. Brandon Landing also puts some stuff out on there, but we have pretty much one post a day. That's a pretty good value over there at bmpro.substack.com. All right, going back. Let's get into the headlines. So, mempool and battle over inscriptions. So this week, the news cycle in Bitcoin has been a bit slow. No major ETF news other than a new ticker was assigned, I think, and some meetings with the SEC took place. And Gary Gensler had an interview that said they were forced to take a fresh look at the ETFs after a court ruling against them. We knew all that stuff. It's not anything special. So it was a slow news week for ETF news. Every time we hit a slow news week, internal squabbles seem to fill up the space. Anything to keep the adrenaline up, I guess. I'm not invested heavily in this one, though. The current debate is about inscriptions. Those are interchangeable. Inscriptions and ordinals are interchangeable terms for the most part. So the two sides are pro and anti inscriptions. But there is a third position, which I and Adam Back are in, is one of general indifference. And not necessarily general indifference. Maybe that's a bad term. It's about understanding the economics of the situation, or at least trusting in the economics of the situation, and that Bitcoin aligns incentives, and obviously, as fees go up, inscriptions will get less and less valid as an idea, and then fees will drop, and then fees will go back up, and or inscriptions will pick up again because fees have dropped, and then fees will go up too high and make it, financially invalid or uneconomic to do them. So, just trusting in the incentives, trusting in the market, how it works, makes you kind of seem generally indifferent. So that's why I put that there. Inscriptions are metadata attached to Bitcoin, stored in the Bitcoin blockchain. In nature, every niche is filled with life. In Bitcoin, if there is an empty economic niche, something will fill it. Here, it is block space. Some people don't want idiotic NFTs and ordinals to clog up the network, like we've seen recently with fees. But the remedy cannot be worse than a disease. In this case, inscriptions are not catching on. The issuers are either Bitcoin attackers or scammers from the altcoin space, coming to Bitcoin because they see the writing on the wall for altcoins. And I do grant there's a tiny fraction of people that are good-intentioned Bitcoiners or well-intentioned Bitcoiners, but they wouldn't be doing this if they didn't have this other group of people making a market for them. So if you didn't have the attackers and scammers filling up 99% of the space for these ordinals, you wouldn't have these good-intentioned Bitcoiners stepping in like they are, because there would be no market. Inscriptions have a big Achilles heel. They are very expensive on Bitcoin due to fees. I don't know what the daily average for an inscription is, but I've seen numbers as high as $2,000 per inscription just to mint. And that doesn't include sending them, transferring them. Because once you mint them, you have to send them with all of their associated UTXOs, I'm guessing. I don't know exactly how it works, but it's got to be expensive to transact in these large things. So this is not economically viable long term, since there is really no value or market for these. And we'll look at some of the charts down below as well. That is where the indifference comes in. In Adam Back's words, you can't stop JPEGs on Bitcoin. Complaining will only make them do it more. Trying to stop them and they'll do it in worse ways. The high fees drive adoption for layer 2 and force innovation, so relax and build things. I'll add one more thing to that. Inscriptions are likely not going away anytime soon, but since they are sensitive to fees, expect them to go in cycles. When fees are generally lower, inscriptions will ramp up, pushing fees higher. In other words, they may help to provide a floor on fees the miners can count on and plan for, at least as long as they last. But I wanted to say something about this, about pushing adoption for layer 2. I also had a tweet. Let's see if I can pull that up. Can't believe I was not ready for this. Well, I'll just describe it. So what I pretty much said in the tweet was 2016 halving was for, oh, do I put that in here down here? Hold on. I can't remember now if I don't think I put that in there. But 2016 halving is like learning about layer 1, okay, and decentralization. And that had the scaling debate, right? Then the 2020 was all about Lightning. Lightning was just getting going. It was growing rapidly, and people were all excited for Lightning as a scaling solution to Bitcoin. Now there are some problems with that. But this next halving cycle, 2024, I think is going to be the halving cycle of Liquid. People are going to come to the Liquid sidechain idea, and that's going to become a lot more popular. We might see multiple elements sidechains launched over the next year or two, and that is pretty exciting. And I actually do talk about that in layer 2 section down below. I just remembered. Okay. $100 million Bitcoin marketing kicks off prior to the ETFs. The first commercial from a Bitcoin spot ETF issuer I've seen dropped this morning from Bitwise, and it's the most interesting man in the world. And he's like, oh, I think about Bitcoin, or I get Bitcoin. Check out Bitwise. So it's a good normie type marketing campaign. It's short and sweet. Look, it's only 15 seconds. Can I play this here? Let's try.
You know what's interesting these days? Bitcoin. Look for Bitwise, my friends.
All right, so there you go. Super simple, easy to be picked up by the normies. I'm going to be excited to see what all of these other ETF issuers are going to launch. And guess what, guys? This is right in Christmas time, when you have a bunch of bowls for football. You have a lot of people sitting around their dinner table at the holidays. And this year, you probably aren't going to be finding too many people that are rolling their eyes at Bitcoin, right? They're going to be actually maybe interested in what you think about Bitcoin. So it's going to be very interesting to see all this marketing, the hype, the halving, the ETFs, everything rolling together, and recession as Bitcoin have as a safe haven play. All this stuff adds together to make this perhaps a Bitcoin super cycle. Okay, next topic is Bitcoin versus long bonds. So I say Bitcoin is a deflation hedge, very similar to long government bonds. Government bonds are probably the most well-known safe havens for an upcoming recession. One of my central theories in Bitcoin over the last several years is that Bitcoin will be globally adopted by large pools of capital as a safe haven instead of the average person as an inflation hedge. I mean, if you have a million people adopting Bitcoin and buying $5 worth of Bitcoin, that doesn't really matter if you have some large pools of capital can put $5 or $10 billion into it, right? So the big movement of this is not going to come from the bottom up. That's my opinion. And I know it's not a popular opinion in Bitcoin, but the large pools of capital are what's going to make this into a globally adopted asset, not people trading $5 in Nigeria or something. So, okay. Notable in this chart is that Bitcoin held support at the previous BTC TLT level and is now threatening to make a new all-time high. So TLT is the long bond ETF for the United States. You expect it to go up as rates are falling. Okay. Now this is Bitcoin versus TLT. And I saw this first. I believe it was Preston Pish that had this, but I noticed this, that it held the previous high here. So if you correct, like there was a lot of talk about Bitcoin not holding the previous all-time high for the first time. But this shows that it did if you just measure it in other similar safe haven type assets. So I thought that was very interesting. And we are hitting right at the all-time high. I mean, we closed at an all-time high. We had an all-time high close, but these wicks up here are keeping this ratio, or Bitcoin to TLT, from going higher. Very, very interesting. Okay, next few topics are going to be about macro. And I wanted to continue to hammer home this Red Sea thing. I've talked about this the last few weeks. I was the first macro analyst in Bitcoin to bring up the Red Sea potential fallout for insurance costs. I think the very first time I said on a live stream, this is going to cause a problem for insurance. Insurance costs are going to go through the roof, and global supply chains. So there was a lot of fear mongering around October 6th attacks, or was it October 7th now? I can't remember. I think it was October 7th, and it was October 6th at 10 p.m. New York time. That's what I'm getting wrong. It was October 7th in Israel. But okay, I calmly debunked this World War III concern on the live streams. I even went into debunking Bob Elliott and Michael Green and saying why, because they were saying that Bitcoin wasn't acting like a geopolitical hedge. Well, the reason why Bitcoin wasn't acting like a geopolitical hedge is because it wasn't a spike in geopolitical risk at that moment. They were reading it wrong. They were interpreting what was going on wrong. Bitcoin was actually interpreting it properly by not caring all that much. Okay, and rightly showed that markets told us the Israel conflict was not likely going to spill over. However, as soon as the Houthi started their attacks or actions in the Red Sea, I immediately saw the possibility that expanding and becoming an issue of greater importance, in line with my call for a rise of state-sanctioned piracy or privateering, and the rising anticipation to the true cost of sea lane security. One of the reasons why we've been able to globalize over the last 50 years is because the U.S. bore the cost of maintaining the security of sea lanes. And not just the U.S., but mainly the U.S. Now, if the U.S. is waning, if U.S. hegemony is waning, somebody else has to pay for that. If nobody else is going to pay the marginal difference there, the cost of international shipping is going to go up meaningfully. 10, 20, 25% higher. So, and that is important because a lot of times globalization happened because you could save pennies on a dollar by doing it somewhere else, right? You would ship something halfway across the world to save 2%, maybe more than that, maybe say 5%. But if you up the cost of the shipping by 20, 25%, because the real cost of security is now borne by more people, by the people in the supply chain, those things now become uneconomic. Plain and simple. So supply chains have to shorten. They have to go to more secure routes. So the U.S. maybe has to trade more with our hemisphere instead of East Asia or something like that, right? So, and Europe will have to probably trade with North America and say Mexico more than China and India, because it's just uneconomic to get there. So the whole world will be realigned and retransformed because of these types of costs. And I don't see anybody else speaking about this in those terms. Okay. I do not consider the Red Sea chaos as an extension of the Hamas-Israel conflict, even though the Houthi spokesman said that this was directed at Israeli shipping. They have not, I'm typos in this. They have not targeted Israeli-bound ships in practice. So all the ships that they have targeted have not been headed towards Israel. One of the first ones they targeted, they said, like, on a manifest 2 months out, like where they were going to go maybe 3 hops away and then go to Israel, but it wasn't en route to Israel at the time. So these things aren't Israeli bound ships, and they're being targeted randomly, indiscriminately. Okay. So this is not really an extension of the Hamas Israel conflict. This is just a uh, chaos. It's really just chaos. We're going to up the costs for you people as a almost like a sanction, right? We are going to sanction this area and make a cost on you, Western Europe, and whoever else is, getting these goods shipped through the Suez. You're going to have to pay a premium now. That's a sanction on you, or a tax even. It's imposing a tax. It's crazy to think about like that. Okay. The news this week was that bulk carriers started to route around the Red Sea and Suez around Africa. That adds more than 40% to the route length and weeks in the time. That might not seem like much, but considering they make money from multiple round trips a year, that could add up to a significant drop in total shipping capacity. If you add 2 weeks, say, to your trip, and you make 4 trips a year or 6 trips a year or something like that, round trip, that's a lot of difference that you are not going to be. Maybe you make 5 instead of 6 now. That's a high percentage of the shipping capacity that's going to get taken offline too. Okay. Where this really matters is energy shipments, though. 40% longer transits will put a strain on supply relative to demand. Europe can't catch a break. So yeah, I mean, the backup, if you're having to send your LNG or whatever around the Cape of Good Hope, adding 2 weeks, that's going to really shrink that supply before the next shipment gets there. So this is not good for prices in Europe specifically. It's less bad for prices in the US, but yeah. So far, around 55 ships have diverted with a daily traffic of 50 to 90 ships. This will quickly show up in prices in Europe. The list of companies avoiding the Red Sea includes BP, Maersk, Hapag Lloyd, CMA, and Mediterranean Shipping Company. So some big guys, apparently. I know Maersk and BP are huge. All right, going on to the next topic here. Powell, non-pivot. Immediately after Powell's Wednesday press conference last week, people were calling it a Fed pivot. No, it wasn't yet. Pro members can read last week's Proton, where I detailed exact timestamps of the press conference and what Powell meant. First, I want to say that I don't think the Fed's policy matters all that much. They cannot make drastic changes to the path of the economy. They can only influence at the margin. That being said, people claim recent stock market performance has been due to the October CPI surprise to the downside and Powell's pivot. In fact, all of 2023 has been quite bullish for the stock market, as I called very clearly. Stocks are rising because people aren't putting money into hiring or expanding their own businesses. They are getting defensive ahead of a recession subconsciously. So that's part of my whole macro thesis. Powell's scenario is that they don't want to overshoot with tight policy. So they're talking about price cuts, right? Going from price hikes to price cuts. Powell commented, he's saying, we don't want to overshoot. We don't want rates to continue to fall and inflation to continue to fall while we keep rates this tight or this high, because in their mind, as rates fall, the difference there, the real difference between, say, interest rates or inflation and policy rate widens. That makes it tighter. It feels tighter in their opinion or in their model. It makes it feel tighter for the economy. So they don't want that. They want a certain amount of difference here. They want, like, say, 2%. So they're going to have to lower rates to keep down with inflation and rate yields moving down. Okay, so they don't want policy to be too tight, so they expect to slightly ease policy. However, this is based on the fact that overdoing it will hurt the economy. So if they keep it too tight, that's really bad. They could cause a recession. Therefore, in Powell and my scenarios, rate cuts are coming because the economy is weakening, not strengthening. People claiming lower rates are stimulative are lost. The market is not dumb. Most macro analysts are. Low rates obviously are negative for economic potential. More money goes into safer things other than risky entrepreneurship and real wealth creation. People don't invest in stocks because they think their earnings will go up, the earnings per share or whatever. They don't think that. They invest in stocks because it's the best thing, it's the best alternative right now. All right. Bitcoin might have something to say about that too. Bitcoin getting a spot ETF right in this period is extremely bullish. Bitcoin could take a significant chunk of a flight to safety. All right, let's move on to price, the price section. All right, so Bitcoin charts. Despite the predicted mid-month weakness, price is holding up very well. There would need to be a massive sell-off prior to the ETF for it to get through every level including 37,877. That is unlikely. Let me bring this up so you can see. I just added the high close, and then this important close down here, 37,877 is this close that took us a bunch of days to break through. The 50-day moving average coming up here probably will be around 40,000 around the end of the year, give or take a few days. And price is sitting right above this close back from, what was that, the 11th. So we'll see where price goes from here. I think there's a lot of support for price between 40,000 and 37,000. So that's what we're kind of watching. Let me go to a live chart. Okay, and since we started streaming, the daily candle has moved a lot higher. 42,350. We're not out of the woods yet. I would say, let me get an arrow. I would say we need to pass this level here, and that is 43,100. If we pass 43,100, I think we can lock in 40,000 as being pretty safe. That is the ultimate bottom for this little tiny correction that we're having here. And once we break 44,100, it's off to the races again. So, all right, let's go back to the report. All right, we looked at that chart. The ETF issuers' marketing campaigns are ramping up right into the holiday season, when many conversations will be had with more interest around the dining table. The ETF is not priced in. This mid-month cool-off is also represented in the CME futures to spot spread down to only $150, with open interest coming down as well. This is an important couple of weeks ahead. We could see some volatility with long-legged candles, so sell-off recover by the end of the day. This will be the first ever golden cross on the weekly. Expect it to get some attention, meaning price will likely gravitate towards that Schelling point. However, there is tons of support at 37,000 and above. And if we get above that level I just showed, most likely support will be very strong at 40,000. Let's take a look at the weekly chart. You can see as the 50 week is going to cross above the 200 week, that is a golden cross. Won't happen next week, I don't think, unless we have a really big week or something. But at least by the end of the year, we will have this golden cross. and support. This is a 7-week. I added on here this gray line coming right around 40,000. So that's even more support at 40,000. So we'll see where this very current price action is that we just talked about, where that ends up. But I say be prepared to buy any dips down to 37,000 support with stop losses below. And don't be surprised with a big candle to open the year. All right, that's price section. Let's go on to mining headlines. So I'm just flabbergasted at how much activity there is in the mining industry. It is going bonkers, guys. So Bitcoin miner Hut 8 agrees to build new site for Celsius creditors. And Hut 8 had some good stuff for their corporate hash rate. It went up by a lot, I think from like 2 exahash to 7 exahash just in the last couple months. So Hut 8 is really doing big things as well. Deals are flying all around the Bitcoin mining sector. This is just the latest. According to an official press release on Monday, Hut 8, okay, where did I link to? This is coinspeaker.com. According to an official press release on Monday, Hut 8 has been selected to build a new facility for Celsius creditors. The company's president, Asher Ganut, said that the company was chosen for the task due to its track record of successful operations. Quote, we believe that the strength of Hut 8's managed services business with 680 megawatts under current management, coupled with their track record of swiftly standing up mining infrastructure and efficiently running and optimizing operations, were key factors in being chosen as the partners for this project. Work on construction is expected to commence in coming weeks. This is happening very, very quickly. Once completed, the new facility will accommodate approximately 66,000 miners. The site will also be provided or be powered by a robust energy supply exceeding 215 megawatts at full operational capacity. So big stuff happening there for just building this stuff out. Now, Celsius, they are one of the big companies that exploded in the last cycle, but they're still trying to work their way through their bankruptcy. And, scammers kind of deserve what's coming to them. But these types of guys, I mean, they're obviously trying to do something with their company. And especially if you start going away from shit coins into Bitcoin only and Bitcoin mining, maybe they've seen the light. We'll see. Okay, next story. Cypher Mining, they are a public miner. They purchased 7.1 exahash of new miners and option to purchase an additional 8.7 exahash of latest generation miners from Bitmain. So Cypher is a publicly traded miner with 7.2 exahash already deployed, and 7.1 purchase would bring it to the second most overall hash rate for public miners, behind Marathon. I think Marathon, let me check that stat. We have this on our mining dashboard for Bitcoin Magazine Pro, and you can see Marathon here has 23.1 exahash, so they're way out ahead. And Cypher, this would put them up above Riot, so that's pretty interesting. All right, let's go back to the report. Of course, other public miners are not standing still. All miners are purchasing more hash rate as fast as possible. All right, next headline. Bitcoin mining ETF has outperformed Bitcoin in 2023 by a lot. So let's take a look at this chart. In blue, we have the Valkyrie Bitcoin mining ETF. And in black, of course, Bitcoin. You can see Bitcoin is up 150% on the year to date. And the Bitcoin mining ETF is up 238%. We were talking about this in the pregame show on Telegram. So, there are some opportunities adjacent to Bitcoin, especially as Bitcoin becomes more and more adopted. There's going to be more and more adjacent opportunities to Bitcoin. So I will be reporting on that. I will be investigating that, examining that, whatever, going through that as the years pass by, and I'm continuing to make content. So that's the kind of the stuff you get from being a member. Okay, difficulty. No change in difficulty over the last year or last week. The next adjustment has rapidly changed from -1% to a positive 4%. So let's take a look at this. You can see last adjustment was -1%, but we had a bunch of positive adjustments right before that. Look back here in the summer, it was like a positive, negative, and then it was positive, 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 all the way up, and then just a tiny little negative. So, yeah, hash rate is going up, up, up. Very, very bullish. Here's the hash rate chart. So you can see this top happened, I believe it was November 24th or something was the all-time high hash rate, but we're threatening that again. And it also depends how exactly you measure that. You usually measure that by the timing of the blocks, like say an average time over the last 100 blocks, or what, I don't know, a certain average, because you can always find a block. You can find 2 or 3 4 blocks in a row at just a couple minutes, but that's not going to last for more than that time. It's going to be equaled out because it's random, right? So average of 10 minutes. But hash rate, I don't know, let's see, oh, this is a 7-day moving average. So there you go, this is a 7-day moving average. It is approaching the all-time high. And I link to sources for all these things, guys, in the report. All right, mempool. Mempool went through a significant drop this last week from yearly highs. In the last 24 hours, however, it has spiked once again. Remember, the typical pulse of the mempool is that it is busier with peer-to-peer transactions during the week. Inscriptions are seemingly doing most of their minting on the weekend. So, during the week, maybe you're using a bank to make different transactions. Companies, Coinbase, or whoever, they're using banks to do these type of transactions. They will probably do those during banking hours. There is a lot more transactions, at least historically, in Bitcoin, Monday through Friday. Saturday and Sunday have traditionally been very low volume, but inscriptions seem to be filling a lot of that up. But let's open this up and check it out. So you see this big drop here a few days ago, but it has just recently spiked back up, but not to the highs, just spiked up. And we'll see how this develops. Of course, I watch this pretty much on a daily basis, and I write about it every week. All right, inscriptions. Now I went through and I pulled a bunch of different charts for inscriptions because I think they're kind of important to understand and evaluate. Are you wanting to be pro inscription, anti-inscription, or kind of indifferent to it, like Adam Back and myself? So inscriptions/ordinals are the internal topic of debate for Bitcoin right now. Let's examine what's going on. First up, you can see that the total number of new inscriptions has maintained relatively constant since April, except for September, when the numbering system broke temporarily and it stopped the auto minting. That's what I think happened. So let's take a look at this. So it's been relatively constant since April. Of course, September was lower when Casey, whatever his name is, that does the, or what's his name? Casey Rodamore, that he updated something with the ordinal protocol and broke the numbering system. And so these auto inscribers, I think, were messed up for like a month, but then they got turned back on. And it has been generally flat. You could say a little bit, maybe the last couple months, we've had some lower periods that might be due to the higher fees even. So yeah, that's what I wanted to say about the total. They are feeling the pain of fees. High fees are the cure for spam. As you can see, the green color denotes very high fees. So back in April, the network took several weeks to adjust to the new thing that was coming out with these inscriptions and ordinals. And so fees really shot up and they were paying very high fees, a lot of them over 100 sats per virtual byte. Then we went through a slump where they were a little bit cheaper here in the summertime. And then, of course, September, October, they were very, very cheap. But now we are back up into the green. I have another chart that shows the This is the fees spent on Inscriptions. So last week, people spent $28 million to mint these things. This is almost totally wastefully spent, or just completely wasted, because they could have just simply bought Bitcoin. Okay, let's look at this. Look at that huge spike, up to $28 million spent to inscribe these things last week. We'll see where this week ends up, but it is all green pretty much. So every inscription, I can't remember I think it started today, was the first day of this week for this chart, and they've all been over 100 sats per virtual byte. So it's very expensive to do this spam. Below, the orange is simply mint transactions. You can see that there's almost zero transfer volume. So mint transactions is pretty much everything, and you see a little bit of gray sprinkled in, and those are the transfer. Now deploy, like the only blue I saw was right here. There's a little tiny pixel basically at the bottom of this chart for deploy. I don't know exactly what that means, but the takeaway here is that they're all mint transactions. They're not being sent around. They're not being traded, apparently. This is what I see from this. So pure spam. All right. Overall, inscriptions are wasteful and an ultimate loser, just like NFTs before them and altcoins themselves before that. There is an attack vector that a nation state could clog up the network like this. However, that is a direct stimulus to the Bitcoin ecosystem, because they have to first buy the Bitcoin to use in the inscriptions and to pay the fees. So if you want to pay me $28 million a week, that, an attack like this from a nation state would be stimulating by $28 million a week. On the grand scheme of things, that's not a lot, but it's something. They're doing the opposite of what they're trying to do if they're trying to hurt the Bitcoin ecosystem. So they're going to spend millions of dollars a week in fees to the miners. All right, that's it for the mining section. Let's go on to layer 2. Is this the liquid cycle? And I talked about that up, above. The 2016 cycle, we collectively learned about the decentralization and game theory of the base consensus layer. The outcome of that era taught us that scaling of Bitcoin transactions was going to happen on layer 2. The 2020 halving cycle, Lightning was the first layer 2 to get mass hype. It wasn't the first layer 2, though. I think at least, well, I don't know exactly when Liquid launched, but two-way peg sidechains was an idea. The idea was right around the same time as Lightning, I believe. So, conceptually they're the same age, but I think Lightning launched before Liquid did. But Lightning was definitely the first one to get mass hype because it was also decentralized like the base layer. However, it seems to add additional trade-offs on top of that base layer. So each layer is going to have different trade-offs. We know the trade-offs of the consensus layer, the very base layer. To have decentralization and have it be censorship resistant, we have to keep it simple and small and solid, very anti-fragile, all that. You can't scale the base layer and have 100 megabyte blocks. It's just not going to happen. That's the trade-off. But going up a layer, you can have different trade-offs in different layers. Liquid has a trade-off of decentralization for federation, but a lot better probably usability and different type of programmability and stuff like that. Lightning is decentralized. It works, okay, but it's not quite as user-friendly. Just like the Bitcoin base layer is not that user-friendly. The user-friendly nature is going to come in different layers. So anyway, this cycle could be the one that people rediscover sidechains, Liquid being the most well-known, and this was my tweet from that. That's the one that Adam Back liked. In this last month, more people have been experimenting with Liquid as a solution to traffic from inscriptions. However, there's still very little to no transfer volume for inscriptions. I assume that they have minted. Okay. So this is the chart of liquid.network and their transaction virtual bytes per second. You can see it basically was at zero for a long time, or very close to zero. The Coinbase transactions, plus one or two transactions a block. And then starting this month on looks like about the 8th, started ramping up. And now we have a slight level here, a slight bit of mempool for each block. So very interesting that there are some people starting to experiment. I mean, still, this is very slow, or this is very low compared to Bitcoin on chain or anything like that. But it is a definite change in character here. You can't look at this chart and be like, oh, yeah, nothing. This is nothing. I mean, this is definitely something. And so perhaps this next cycle is going to be dominated, like 2024, 2025 will be dominated by people experimenting more with sidechains. I think that's interesting. All right. That's going to do it for today, guys. Thank you for joining me. Let me check the comments. Dex Invictus back with us. What's up, man? We got 10 viewers. If you guys are watching, wherever you're watching, put a comment down below if you have a question. Let me check up with Telegram. Got a few comments here. Yes. BTC did start to pump when I was just hit live. That's the reason right there. Mt. Gox was the first layer 2, says DT. All exchanges are basically a very rudimentary centralized layer 2. That is very true. I want to go back to like maybe 2016. I was talking about how I saw centralized ecosystems growing up around exchanges, and that could still happen in the future. It's, like, think about if you go back 100 years and you have company stores. So these people worked for a company, and the company had their own neighborhood right next to the factory, and they had factory store and a factory school for your kids, and everything was within network, right? Probably factory doctors that were just right there that served the community for that company. And that kind of idea, but put into an online form or something, I don't know, that around exchanges, you could have connections with different payment providers, different stores. I mean, Visa, MasterCard are like that kind of, right? So think of Coinbase, or who would be another big one? Gemini, or I don't know who you would trust. Binance, of course, but you wouldn't really trust them. They would have different laws going internationally and stuff. But yeah, I thought about that a long time ago. Coinbase definitely is a layer 2. Another layer 2 is like casino websites, because you would put in your Bitcoin and then you would play the poker, play blackjack, or whatever you're playing. You would do a lot of different transactions, but it's all on another database, and then you would withdraw your Bitcoin, and then that would go back to the chain. So yeah, DT, great comment. Those types of layer 2s will definitely be widely used. Good point. Someone else says, same as if paper state currencies were backed by BTC. Yes, so he's replying to DT because DT was talking about the exchanges as layer 2s. And yes, that is true, that if you have, say, a bank could play this role. If they hold Bitcoin and they have Bitcoin that's backing the currency, again, commodity backed money, except it's Bitcoin backed money, they would be holding it for you, and whatever their digital tokens that they use around, but see, that's where I think they could use something like a sidechain. So the United States of America will have a sidechain, and then all the banks can join the sidechain, and that's how they will transact. Sell the news in January, from Facey McFace. I don't think so, but I don't think the Bitcoin ETF is priced in at all at this level. If we were sitting at say above 50,000 right now, I would say yeah, it could be a sell the news, at least slightly a the news event. But as it stands right now, like if we just go sideways until January 10th, no, it's going to be a big time news. I think as we approach January 10th, there's going to be a lot more uncertainty. People that say that, oh, they're 90-95% sure right now. As you approach that date, people will start bringing up all the history about how everything was canceled in the past or denied in the past. I remember the Gemini ETF coin when it got denied because I was in the hospital with my wife giving birth to my son. And I remember all the hype around that. And I was very confident at the time that it was going to get approved. So as we approach this, people like me, people that have been around a while, they'll start questioning. They'll be like, "Oh man, I was so wrong last time. Is this going to be right this time?" They're going to double, second guess themselves, and your confidence will go from 90% to 50-50. So yeah, that's another reason why it can't be priced in, and another reason why we might see a price dip before. Uh, when when these type of events happen, um, I mean, 2017 release of the CMA futures, that was a little bit different because we knew it was coming and we knew it was going to go live on December, whenever it did, December 15th or whatever it was. It wasn't like one of these uncertain events. It was going to happen and it just happened to mark the top. Okay. This type of event, there's a lot of uncertainty. And what happens when a market has uncertainty? You have to price in that uncertainty, and that means putting price down. So when it gets approved, let's say it gets approved, even if it doesn't get approved, even if it gets denied, that uncertainty goes away. And when you take uncertainty out of the market, usually prices tend to rise. So I think no matter what, if we go sideways from here, January 10th, we're going higher. And if we're up at 50, we'll readdress if we get above 50,000, because at that point, it might be a sell the news event, at least for a 20% dip, Okay, let's check out any Dex Invictus says I move markets. Yeah, man, that's why we pumped. That's why we pumped. Let's go take a look at the price right now. 42,300. Again, we got to make a new high from this one up here at 43,100. If we can break that, I think 40,000 becomes that support. This is the support I'm watching right now, 37. But if we can break out to a new high, daily like swing high from this little formation here on the 14th, then I think 40 becomes that ultimate support. But okay. Thanks, guys. Check out bitcoinmarkets.com. Check out bmpro.substack.com. And I'll see you on the next one.